All right, welcome back, everybody. I want to talk about FOMO this week.
All of which are American dreams.
Okay, for those that don't know, FOMO is the fear of missing out. You see a good deal happening, you're afraid you're not going to get in on it, and it causes you to buy something that you probably shouldn't be buying at this time. It happens for some investors all of the time and probably happens to all investors at least once. There's always something hot, people are making money, and you don't want to sit on the sidelines while fortunes are being made, etc. But the fact is, by the time you, i.e., the general public, not plugged into the market 24/7, hear about it, it's probably too late. A recent case in point would be the AMC debacle, whatever you want to call it. By the time this made the mainstream news, it was too late to buy in and make substantial gains. And if you made any gains at all, the people that made gains were here. But the majority of people bought here and are now at a 52% loss. How is any of this going to help you avoid FOMO? It isn't. Not until you accept the realization that you just can't own everything. You can find examples of this online all the time. New investors opening an account and over diversifying with 100 holdings with a portfolio value under $1,000. M1 makes it easy to, come in here, edit. I can add a slice and I can, add Apple. Come down here, click add it to my portfolio, and it's that simple. And I'll just have one more holding and I'll start buying Apple. Let's get out of here before I make a mistake. For now on, I'm keeping this portfolio at 3, but people do get in here and add multiple slices until you have those fractional shares so minimal, they're almost pointless. No, it is pointless to own it at all. And as I put this out there, I'm also commenting on my own portfolio as well. You can see here, I've got several holdings that are under 5 shares each. And I just don't like it. Right now I have holdings of 48 holdings, and that's too many for me. If you watch a lot of online videos, if you're on Reddit at all, you're watching videos on YouTube, there's somebody always making a bull case for some stock that their explanation seems reasonable, seems like a good bet, and you get FOMO'd into it. So what I'm doing personally to avoid that is I am not adding any new holdings. So I'm not going to add any new holdings to my portfolio going forward. If I do want to add a new holding, I have to sell 2 of my current holdings to help me get down. Or I need to have all of my holdings have at least 100 shares, which I have that on a couple of the lower dollar ones. Or they have to have a $5,000 market value. If they don't, then I need to concentrate on these. If I don't believe in a stock enough to get to 100 shares or invest $5,000, then I shouldn't have it in my portfolio at all. I am primarily a dividend investor. And if my dividend that I'm getting quarterly isn't getting me at least 1 share of the company or a big portion of a share, then to me, it's just not worth it. It's great when you start out and you get that first 5-cent dividend payment. And you're like, oh my God, free money. This is great. But after a while, you continue to get under $1 dividends. It's just ridiculous. Let's go back here and take a look at the $100 a month portfolio. So I've kept this portfolio at 3 simple holdings. So when I add money, it's grown pretty quickly. I just barely started this January of 2021. So 14 months ago. Let's go ahead and take a look at, and if we take a look at the dividends, yes, I'm not getting them every day, every week, every month, but they are getting to be substantial. My first dividend, 55 cents, then up to 74, $1.14, $1.72. AbbVie, $1.46, 285, 452, 582. That's the type of growth I want to see. You know, if I had 10 holdings in this portfolio, each of these would be divided by a third, and I would be getting hardly anything. So that is what's helping me keep it at 3. And granted, I do have these other portfolios where I can have many more holdings. So it does help me with my discipline to keep this at 3. But even with these other portfolios, I'm not going to add any new holdings. And if you want to pause the video, you can see exactly what I have, how many shares, everything's right there. As I mentioned before, the other criteria I have for my portfolio is if I do want to add a new holding, I have to sell off 2 of my current holdings. This also is helping me stay disciplined and not just FOMO into something new anytime I hear something on the news. I do have some holdings that I have earmarked to get rid of. Budweiser and Beyond Meat, for example, are 2. There's a couple others. I'm just waiting for when I can get back in the green, they will be gone. So let's talk about why this subject has come up lately. I'm sure you've all seen the news that Google is going to split 20 for 1. So as soon as you see that, you're like, wow, FOMO, I got to get Google. So when I first heard this news, that was my first thought. Oh my goodness, I need to get Google. I got to get in this. But I took a pause. I didn't go to M1 and quickly add it to my portfolio with 3 simple clicks. Could have been done. I did have to take a look at it, and I thought, okay, at $2,600 a share, I thought, honestly, how many shares am I going to get before the split date? Certainly not 5 like I would want to get me to the 100 I'd ultimately want. And if I did focus on this new holding, everything else in my portfolio would be stagnant. And we all know that 1 share at $2,000 is the exact same as 20 shares at $100. But psychologically, it's different. And let's not kid ourselves. Investing isn't all strictly about the math. If I still want to add Google later on at some point, I can do it. I just need to follow my rules. I'll have to get rid of 2 other positions before I add this one. Now that everything has calmed down, it's not really something I want to do. I want dividend companies, and Google is just not there for me. And there's a big reason why. So I've decided, instead of adding Google, I already have Amazon in my portfolio, and I'm better off concentrating on that. So in between the time of me writing the script, because I'm not the most prompt person putting out these videos, I know. So in between writing the script and today doing the recording, Amazon has announced a 20-for-1 stock split. And so with that, I will try to increase my holdings on Amazon as much as I can. Even with the spike in price, with the announcement, I'm still negative 2% on this. So I feel good about pumping new money into this post announcement with the spike. And that's really it for this video. Thank you for watching. All right, thank you for watching, and I hope your investing journey is going well. Put down in the comments below your FOMO story. Are you getting into Google or Amazon just because of the split? Do you already hold them and you're pumping new money into them? Do you have another FOMO story that you did well on or that you didn't do so good on? Let me hear about it in the comments. All right, thank you for watching. Please like and subscribe, and happy investing. And cut.